and welcome to the Market Closing Show. This is a collab show between Business Today and India Today Television. I'm Sakshi Batra. This is 3 p.m. show and we are here to get you all the market closing action. First up, let's take a look at what's hot in the world of corporate and the financial space. Diwali Dhamaka on D Street. Nifty Bank has hit a record high level. It has jumped 10,000 points from the 2025 lows, while Nifty has climbed to a one-year peak, trading near 25,700 mark, with FMCG and consumer durables leading. IT and metals sectors, however, have lagged. The bull run in precious metals continues. Right ahead of Dhanteras, MCX gold and silver have hit fresh record highs even today. In New Delhi, the 24-carat gold now trades at 1.3 lakh rupees per 10 grams. Silver is near 1.92 lakh rupees per kilogram, approaching the 2 lakh rupee levels milestone. Reliance Industries shares have risen 1% higher, right ahead of its Q2 FY26 results this evening. Investors await updates on possible Jio IPO, the timelines on that front, Reliance Consumer demerger, and the oil to chemicals margin recovery. Investec brokerage firm has initiated coverage on Reliance Industries right on the day of the earnings, with a buy call and an 1,890 rupees target price for the stock, implying a 30% upside from the current levels. Defense stocks also soar as Tejas Mark 1 takes its first flight in Nashik. Not just HAL and Bharat Electronics, but even Bharat Dynamics. In the private sector, some players like Data Patterns, MTAR Technologies, BDL and Zen Technologies, even Astra Microwave are up to 4% and 5% each. There are reports that HAL is actively collaborating with private players to increase the Tejas output. Reports now indicate Coca-Cola is set to consider a $1 billion IPO of its Indian bottling unit, Hindustan Coca-Cola Beverages. The move aims to unlock value, expand market presence, and offer local investors a stake in the company, reflecting confidence in India's growing beverage market. Viewers, let's straight away look at how the markets are trading right ahead of Diwali. This is the last trading session before Diwali. In fact, Monday is Diwali, but that day the markets are open for the full day. But Muhurat trading happens on Tuesday. 25,716. Despite some choppiness at higher levels, we are back about 0.5% higher in trade on the Nifty. It's the FMCG, pharma and the auto sectors that are driving the move. We're also looking at some banks that are pulling up higher. But what is dragged? Metals have given up some of their gains. PSU banks are down. You have some mid and small cap losers at this point in time as well. So the broader markets have slipped in trade at this closing hour. Right now, when we talk about the top gainers on the Nifty, you have Asian Paints as the one that has moved up beyond 2,500 levels, 4% higher in trade. M&M has also moved up, 2.4% up. Bharti Airtel is up by about 2%. Max Healthcare, ITC, these are the other top movers on the Nifty right now. On the laggard side, well, you have the IT names, Wipro, HCL Tech, even names like Infosys that's down. Eternal has also given up some gains, and Tata Steel is also down in trade, among the top losers in trade right now. Let's welcome our guest on board, but Mr. Chakri Lokpriya, the CIO of Equities at LGT Wealth, is now joining in. Warm welcome to you, Chakri. Good to have you with us. Season's greetings, happy Dhanteras and Diwali to you right in advance. To your team members as well as your family members at large. We hope that this year turns out to be a super profitable one for you thus far. Help me with your take. Last couple of sessions, finally the D Street spirit is back and aligning with the festivities back home in India. Help me understand, what's your take? The FIs are also looking at it positively. So what's changing in the D Street sentiment right now?
Happy Diwali to you and to all your viewers. And I do hope that this new year will be a good year for Indian equities. And in terms of the market, where we're positioned right now is we are in a, if you look at banks are beginning to report good earnings results. IT is beginning to report good earnings results. And so it kind of tell you that, all this turmoil, global turmoil, tariff turmoil that we faced is kind of now in the numbers. So basically, we should start looking towards the next quarter for an uptick in earnings. and therefore that will mark the beginning of the FIs coming back to India.
Absolutely. Now, Chakri, help me understand when it comes to the new Samvat year that begins starting Tuesday, what are you expecting for the markets? We've had a long underperformance, consolidation at play this year, flat returns for investors and, those who had been big on gold and silver have been cheering away to the banks. But equity investors have had a lot of disappointment. So, but going forward into the new year, what do you expect for Indian equities?
I think going forward into the new year, it's the domestic sectors which will benefit. Domestic industries such as consumer discretionary, auto, hospitals. These kind of companies are not subject to any global tariff pressures. And after the GST cut and the income tax cut, their earnings will grow now faster and therefore deliver strong returns going into the next year. And likewise, some of the global sectors like metals, they're not impacted by the tariffs. And so they will also grow faster because there is a recovery that's happening in Europe as well as in the US. So I think we need to construct a portfolio which is domestic facing and those select metal names.
Absolutely. Since you talk about tariffs and Chakri, that has been one of the biggest pain points for equities this time around, the volatile sentiment that has reacted to every tweet, every statement that has come in from the US. What's your suggestion, for this new year? And, amidst these uncertainties, what's the best way to approach the equities then?
I think the best way to approach the uncertainty is to look at all the what we call as the new India companies. The new India companies many of them are domestically focused, whether it is defense, railways, or the more secular growth ones like automobile, auto ancillaries, tire companies. And these are secular growth. They will benefit from the GST cut as well as income tax cut. And they have less of an export related worries to think about. Then, on the other hand, even the staples now, given that we've had a good monsoon, they will also start benefiting. I think that's the way that we look at it.
Okay. In fact, when we're talking about the external environment and the challenges that India has been facing because of a lot of policy changes, let me, ask all our viewers to pay attention to Commerce Minister Piyush Goyal, who's once again emphasized the need for diversity as far as supply chains are concerned. In his second address to an industry association in as many days, the minister has reiterated that India could no longer be overly dependent on one country. Let's listen into what he had to say.
We must all assess our respective supply chains. We must see whether we are overtly dependent on any particular geography. It need not be one country, what you are all thinking of. It could be a dependence, let's say, on a Western country. But on any product, if we are overtly dependent on any one country, you are prone to vulnerability, particularly in a world where trade is being used as a weapon. We've seen the weaponization of trade. We've seen the weaponization of supply chains. And therefore, it's important that we all assess our supply chains and make them more robust, wherever possible, self-sufficient and self-reliant.
Chakri, coming back to the conversation that we were doing, you've been highlighting that domestic focus industries will be better bet at this point in time when we are grappling with a lot of uncertainties at large. The government is also trying to explore where we can reduce our dependence to one country so that we continue to protect a lot of our Indian-oriented sectors and even our exports to a large extent and continue an unabated supply chain, with all of these challenges. How are you looking at this? What do you think an investor needs to keep in mind when one needs to know that, the government is maneuvering through all these challenges and really redefining, reimagining their own relationships, their own strategies when it comes to trade?
You're absolutely right. And in fact, from what Piyush Goyal just had to say, there is a deglobalization that India needs to think of. And so, which means it is to focus on oneself and therefore, the domestic consumption and domestic production and domestic manufacturing. So within the domestic manufacturing, it's industrials is a big sector, nation building, roads, bridges, dams. So companies which do that, like, L&T, NBCC, look at that. Second, the defense and the railways. You need to transport oneself, you need to protect the nation and export as well. So that's where the defense, I think, is a sector which will grow very well. And then consumption. India is now reaching that point where the consumption is going beyond the daily bread and butter,
Sure.
or rather the roti of the everyday. So therefore, consumption is very important.
Consumption is very important, and defense also you're positive on. We were just marking out in our top news today, Tejas Mark 1 with the first flight, and how most of the defense stocks are also rallying in trade. Chakri, if you could pencil in for us a broad picture on how to choose and how to go about selecting and going forward with your defense focus. Last time around, when we had seen a super bull rally in the defense stocks, most of investors missed that up move. They entered only at the peak of the rally. Thereafter, the stock and within the sector, we've seen a long-drawn consolidation at large. Yet, of late, we are again seeing government's focus, more orders coming in, redefining the strategies there. So, should one be aggressively invested in defense? Should one be staggered by way of maybe mutual fund, SIP investments? Should one have just a select few stocks in the portfolio? How are you advising clients?
Defense as a secular sector will grow for over the next several years. In fact, Europe has a plan to spend nearly 2 to 5% of its GDP on defense. So which means that, Indian defense companies manufacturing for India as well as for the world will benefit, whether it's a Bharat Electronics or Hindustan Aeronautics, they're the leaders. So clearly one should invest in the leaders as well as emerging companies like Solar Industries or Data Patterns, because they're coming up with new technologies, new kinds of equipment which will benefit. So it's a combination of both the leaders as well as emerging leaders.
Sure. We are also in the midst of the earnings season, and today we will also have Reliance Industries report its numbers as well. So the action is only picking up pace. Saturday, we will have all the major banks report. HDFC Bank has been consistently moving up ahead of its earnings last 4 days as well, nearing its record high level. So all of this is coming up in focus. But let me first ask you, Chakri, to break down for us what has happened thus far from the big 4-5 IT names that we have got the earnings of. What has your understanding been? And from the overall earnings season, just at the very beginning, any thoughts there?
The earnings season as we went into the quarter was on a subdued note because of all the uncertainty. And therefore, one expectation was about a 6 to 8% earnings growth, and even more subdued for the export-oriented names like IT. But contrary to expectations, IT has started doing much better than expectation, despite the H-1B problems and despite the tariff problems. So therefore, they have kind of bottomed out. And second, the domestic sectors clearly will benefit, and the GST-like sector that we've spoken about, they will all start to see an earnings better than expected results in the next quarter.
Okay, let's talk about Reliance Industries for a bit. Viewers, today is when in the evening after the market hours, we will get to see Reliance Industries, the largest listed company on the stock market exchanges by market capitalization, will be reporting its numbers. Right now, you can see the stock up by 1.3 odd percent. There's been slight choppiness, but it's been holding up. Remember, this is after the market sentiment has been pretty much weak in this entire Q2, and the company has also seen a 1.8 lakh crore rupees wiping off from its market cap since Q1 as well, in the last quarter alone. Now, investors also are looking forward to a strong performance that's expected from Jio and retail this time around. There's also an expectation of 5 million new Jio subscribers, healthy EBITDA growth as well. Investors will also be watching out for any strategic announcements or details when it comes to the initial announcement of Jio IPO and Reliance Consumer demerger, any progress in the new energy businesses as well. So those will be the key metrics that one should be definitely watching out for. Chakri, what are you watching out for RIL in this quarter, and what's your take ahead of earnings on the stock price?
As you rightly mentioned, it is clearly not only the largest company, but it's also the leader. And it's a great combination of both old world businesses and new age businesses. And the new age businesses are the new energy, where a significant amount of value will unfold in the coming years. And in their existing businesses, retail with the GST cuts, etc., will benefit, as traditional business of oil and gas will kind of now start growing. And therefore, if you add up all these various businesses together, I think Reliance Industries is very well positioned, and with the planned IPOs, adding a further fillip to the stock.
Okay, got that. So that's as far as the largest listed company is concerned and the expectations on the earnings front. Of course, tonight is when we will decode the earnings and, of course, give you more details on it on Business Today Television. So stay tuned for that as well. But viewers, we've been talking about Dhanteras as the occasion tomorrow, the biggest occasion for and the auspicious occasion where people go ahead and buy gold and silver items for themselves, considering it very, very auspicious. But remember, this is the time when on Dhanteras, gold and silver prices have already scaled up newer record high levels on an everyday basis in the run-up to Dhanteras as well. On our Dhanteras special conversation, earlier I spoke to top commodity experts about the bull run in gold and silver right ahead, and what are the price targets till next Diwali and Dhanteras that we could expect on these precious metals and whether the rally will sustain. So let's listen in to that conversation. How are you looking at this unstoppable rally in gold and silver? And also, will this continue post Dhanteras and Diwali, or will there be some profit taking there now?
Traditionally, we have viewed gold as a consumption asset, but now it is a trusted financial investment. So while physical gold has remained deeply rooted in India's culture, but then we are seeing a noticeable shift. Now the millennials are driving this change wherein they are investing big time into gold through ETFs or through mutual funds or digital gold. So I think there is a big shift here in terms of the investment culture that we are seeing in India and globally. Also, investors are turning up to gold with the strong inflows that we have seen in gold ETFs. So there have been a lot of factors which have fueled this rally this year. It's an era marked by tariff war, the recent shutdown of the US government, the geopolitical risks, and the monetary easing cycle of the US Fed. Apart from that, it's been supplemented by strong buying from central banks, which have continued for last 4 years, where then they have been buying upward of 1,000 tons. And then this year also, the figures are likely to be more than 1,000 tons. So if I just talk about one figure, earlier, prior to 2022, central banks were buying just 500 to 600 tons. But then for last 4 years, once the Russia's dollar assets were frozen in 2022, there has been eroding confidence in dollars. So we are seeing a tectonic shift across continents. Dollar is losing its dominance and it's becoming a multipolar world. So this is a major shift which is likely to continue in years to come.
When it comes to this entire new Samvat year's expectation on gold and silver, what are the targets even beyond these more than expectation kind of levels that we are actually seeing at this point in time? What is your expectation for the new Samvat? Where are you seeing gold and silver headed?
Sakshi, I see gold prices heading higher towards $47.70 to $49.00 per ounce. And if I convert it into domestic market, I see levels of 145 to 150. So maybe this could be seen this year itself because we have been revising our targets multiple times. I think nobody was expecting this kind of a move in this year only. My targets for next year have already been achieved. But yes, now my targets are 1,45,000 to 1,50,000. But yes, with the caveat, probably they could be achieved by the end of this year itself. Though I'm looking at them for the next year, there could be a break in between in this rally because it's already been a spectacular rally. It's a parabolic move. So there could be some profit booking after Diwali. But yes, the overall trend still continues.
Let me also ask Mr. Sen, because he's the one who is actually witnessing the demand on ground.
So if we look at the footfalls at the stores in the current last 10-15 days, I must say that, at these high-level gold prices also, we have seen almost a 2.5 to 3 times jump in terms of footfall. So that is a very good sign that consumers at these levels are also continuing their, interest towards gold or silver. And it must be because it has given them the returns for all the gold and silver that they have been buying over so many years. So I think that they should be the happiest people today as we see the gold and silver prices rising. In terms of the expectation of sales, in terms of the value terms, we are quite, I think, as an industry, expecting a 20-25% rise in terms of value. But at the same time, we must, the reality is that prices are high. Consumers have increased their budgets, but not to the extent of the jump in price rise. So in terms of volumes, we will see a dip that people are looking for more lighter weight jewelry. People are looking at lower caratage, so 18 carat, 14 carat, 9 carat, whether it is plain gold or diamonds. People are looking at jewelry that looks heavy, waist light. So we will see about a 15% odd fall in terms of volume. But in terms of value, with the records that are being broken every day, we are expecting a 20.
Okay, there you have it. And you can, of course, watch this entire conversation on Business Today. Chakri, coming back to you. Gold and silver outperformed the Nifty by a huge margin this year. But up until the next Samvat, by the same time we talk to you, do you think equities will have covered up a lot of this ground?
Equities are set because, they've kind of underperformed this year. So they're expected to do well going to the next year. But gold as an asset class will continue to remain very important.
Okay, what about silver? Do you think that's now featuring in the core of the investment portfolios as well? Or is it just an aberration and it will still remain a very volatile class, and therefore managers like yours will be very careful with the silver moves even now?
All metals commodities are very volatile, so we need to be careful of that. But as a pack, I think it'll do well because for many reasons, even governments are buying gold and silver.
Okay, so Chakri, help me understand, what are you advising clients? What have you changed for them in their portfolios? Has there been any rejig of sorts, for the next fiscal year and the next Samvat as well? What is your understanding of where should one exit from and what should one completely be looking into?
I think for the next Samvat, the focus is clearly on domestic cyclicals, so in all industrials, consumer discretionary durables, whether you want to buy a car, AC, TV, all durables like that, as well as some select mining companies, so metals. So I think a combination of these two together, we think is where the returns will be made.
Okay, got that. Since we're talking about the next Samvat and what to expect in Business Today's again, Diwali special, as markets are gearing up for the next leg of rally, investors are looking at which sectors could probably take the lead. Earlier, Business Today Group's editor, Mr. Siddharth Sarabi, also spoke to Rajiv Thakkar, the CIO and director of PPFAS Mutual Fund, to discuss where he sees the next big opportunities. Let's listen into that.
What do you think will be the key sectors to watch out for, even for those who are investing in the markets through fund managers like you?
So, one sector which hasn't really participated in the up move, or where valuations as compared to the historical averages look reasonable, has been the banking space. Here, sentiment has not been that great. IT services, the consensus opinion is that a lot of headwinds, global captives are coming here, effect of AI on the amount of work that will be there, and resultant impact on margins, etc. Growth rates have been very, very subdued. However, in the past as well, we have seen the sector go through cycles where some periods are very, very high growth and some periods where the growth is subdued. So I think these two spaces look reasonably okay to identify individual opportunities. Select PSU or utility kind of names look reasonable. After the GST cuts, auto sector has been seeing a good amount of volume growth. However, one has to finally look at the individual company valuations. A lot of these things that I'm talking about, things like improved demand in auto, is probably already reflected in the stock prices. So one has to be selective and wait for the right opportunity to come by.
All right, viewers, let's start looking at how the markets are shutting shop now. A minute to go before we end the day. The Nifty is about 0.5% higher in trade. So you have seen smart moves today. 25,700 is with us towards the closing edition of the markets today. 0.5% up in trade. What supported the sentiments is FMCG, pharma, auto kind of sectors that have all pulled up in trade today. We've also seen financials definitely move up in trade towards in today's session. What we've seen dragging today, in fact, is the metals that have given up some gains. We've also seen PSU banks that have dragged a bit as well. The broader markets, mid and the small caps, also end with losses in today's trading session as well. Let's also look at how the Nifty gainers are placed up right in the closing edition. So we have Asian Paints right at the top, 25,510 odd levels can be seen on this one. 4% of a rally on this one. You can also see names like M&M, Bharti Airtel, Max Healthcare, Tata Consumer Products as among those all top 5 movers that we are looking into the markets. Top drags, clearly, like I said before at the beginning of this show, it's the IT pack that is giving up some gains. Wipro, Infosys, HCL, Tech Mahindra, they're all down in trade today. Anywhere between 1.5 to 2.5% kind of losses. Even Zomato is looking at with some losses. But this is the point that we should be getting back with our conversation with Chakri now. Chakri, let's talk about Zomato. That's an interesting one. We've talked a lot about this stock also even before. What's your thought? Earnings came in. We've seen Blinkit performance again continuing on the positive side from the quick commerce space. At these prices also, would you be a buyer in Eternal?
Zomato is actually well placed as a market leader, and of course, Swiggy is right behind it. So I would be buyer in both the companies because their businesses are growing really fast, and second, there is also a sense of looking at profitability. So I think clearly would be buyer of both.
Okay, clearly would be a buyer of both right now. When we talk about the other companies beyond both Zomato and Swiggy from the quick commerce space, what other companies are coming onto your radar from the tech space? Do you think this has more legs to go in the new Samvat too?
If you stick with new age technology, when companies like Nykaa, because there is a broadening in fashion industry, online fashion industry is growing very fast, and also with the GST cuts, there is a broader market that they're addressing too, and it is secular, which will stand for a longer time. So I think online as a space will continue to grow very well in the coming years.
Okay, got that. Let me now just go on to our queries that we are getting from our viewers. Chakri, for you, we have our first query from our viewer Ratan Singh from Jaipur. He wants to know, should I invest in defense stocks and will this rally in the sector continue? Chakri, what would your advice be for Ratan Singh?
Defense is clearly a very valuable sector. It's a secular sector, so one should invest for the longer term, not trying to make a quick trade out of it. And clearly, over the, let's say, in a 3 to 5 years term, there is clearly a very valuable sector.
Okay. Let me also look at another query that we have. This is from Sagar Sharma from Jamshedpur. Says, should I invest in physical gold and silver or should I opt for ETFs instead? Well, at these prices also, people are looking at participating in the gold and silver rally either via physical or ETF space. In fact, I was speaking to one of our experts who said from Quantum AMC that this is an unprecedented year where we have seen ETF flows surpass any kind of historic metric. How are you looking at, the gold and silver investments? What is the best way to go forward?
ETFs are far more secure, digital, easier to store, easier to buy and sell. And therefore, so whether it's a physical commodity or ETF, both as an asset class will do very well with short-term volatility, given that they've gone up so much in a very short period of time. But longer term, clearly, yes.
Longer term, clearly, yes. All right, on that note, Chakri, thank you so much for being with us and, of course, helping all our viewers with an insight across the board from equities to gold and silver as well. Remember, viewers, we are in the run-up to Diwali. In case you are looking forward to participating this time around, for the first time for India Today viewers, we're going to be getting the Muhurat trading live as well. So this Diwali, celebrate prosperity with Business Today Television's Muhurat trading live. Samvat 2082. From gold and silver to stocks and portfolios, get all the market insights and expert insights to plan, to profit and to prosper. Join us on October 21st from 1:30 p.m. to 3 p.m. as top market masters decode the festive market mood. Catch Muhurat trading live on India Today as well as across all Business Today television and digital platforms. Stay tuned for that. Many thanks for tuning in onto this edition.